Hi, listeners. This is Steve from MakCorp, and it's my pleasure to be doing a podcast with Shanthar Pathmanathan from Chariot Resources ASX code CC9. Thanks, Shanthar. Appreciate your time, and thanks for joining us.
Hello, Steve. Thank you.
So, a lot to talk about today. Let's firstly start talking about your projects. Why lithium and why Nevada and Nigeria?
Lithium to us is probably the most significant commodities market opportunity of our lifetimes. I come from the oil industry, worked there for 15 years as an investment banker, saw, the returns that were made now in oil and compared to what happened 200 years ago. I think that opportunity is in lithium now, what the oil pioneers got 200 years ago. And more specifically, right now, lithium is probably one of the best performing commodities on the market. And people can just look at the commodity price for that.
Yeah, well, it's reaching 130K recently, or thereabouts.
Exactly. And the new use case for lithium, Steve, has been BESS, so battery energy storage systems as backup power for the power grid and for AI data centers. And surprisingly, those developers of those facilities, power grid backup storage facilities and AI data centers are defaulting to lithium-ion batteries because of the ecosystem that's been built for supplying these batteries is superior, larger compared to the alternative battery chemistry, sodium ion, which is still pretty, embryonic in terms of the technology and the development of that ecosystem. So I think we're very well set now with the lithium sector.
That's proven. That's already proven.
Exactly.
And with your projects, obviously, as we've discussed, Nevada and Nigeria, what's the focus for Chariot?
Sure. The focus for Chariot is going to be very much Nigeria short term. Longer term, we will be developing the United States assets. The US assets actually came into our portfolio first. The Nigeria assets we have done a deal on last year, 2025, July 2025. We were working on that deal for about 6 months before we announced it, and we did it in the depths of the recent lithium downturn. So we basically seized on a bunch of assets that were going to be listed for 120 million USD on the Nasdaq. We seized on it when the spodumene price was around $600 a ton. Most projects around the world were uneconomic. People were throwing the towel in. And we saw the opportunity. It was actually prompted by a trip to China where we saw some real appetite that was conflicting with what we were seeing in terms of the price, lithium price at that point in time. So that was telling for us. So we moved in. So Nigeria is going to be our focus, and then in Nigeria, it's a twofold focus. So we think we've got one or more company making projects there. Pilbara Minerals or Sigma Lithium type discovery. Sigma is the one that's got the massive project in Brazil. So we've acquired 4 projects. We think 3 of these are a high priority and potentially one or more company making projects. At these projects, we want to do exploration to make a large scale discovery, something like a Pilbara or Greenbushes style pegmatite discovery. At the same time, we want to put these assets back into production. So the unique feature of these assets is they've all been in artisanal production. They have all supplied lithium to the Chinese market. And so the product is being validated by the market. And there's a real short-term opportunity to put these assets back into small-scale production.
That's exciting. And particularly if you can sort of move into production, a bit quicker, because as we all know, getting to production from acquisition is generally somewhere a 7 to 10 year turnaround.
We think that's looking more like 6 to 12 months, Steve. There are conversations happening with mining engineers, with people on the ground, and with most importantly, Chinese off-takers. And those conversations are live and well, and they want product right now, basically. So we won't go back to artisanal. It'll be some form of small scale. So with some investment, modern mining, heavy equipment, and so on.
And which project is the most advanced for that in Nigeria?
It's Fonlo is the so FONLO. Fonlo
Yep.
is probably the highest rated project there. It's got lithium crystals, hedenite crystals, so greenish color crystals, very similar to Pilbara's Pilgangoora project, the crystal, the spodumene crystal there. And the crystals there are up to 1 meter long, so very much amenable to processing through gravity. DMS plant should be able to process it adequately into a 6% concentrate. So yeah, that's our highest rated project in Nigeria.
And is that the MOU you've sort of agreed to recently with Great Power? Is that to help that project, is it?
Yeah, so we're talking to a number of parties, not just Great Power, and the focus is twofold, pretty much in all cases. A couple of the parties do just want larger scale supply, but most of the parties want short-term, small scale, and longer-term, larger scale supply.
Yep, fantastic. Did you want to mention anything else about the projects before we move on to talk more about your team and other areas?
Yeah, look, despite what I've said, we're not ignoring the US assets, right? So we're coming out of the winter in the United States now, or still winter. So this upcoming North American summer, we will be drilling. Lithium is back, so we expect to be well funded, and we will be drilling at Resurgent, which is next door to Lithium Americas, the second largest land position in the McDermitt Caldera. We have repossessed the Horizon project. That's got a resource of 10.2 million tons LCE. So there, I think we do step out drilling, because the phase 1 drilling alone got that 10.2 million ton lithium carbonate equivalent resource. To give everyone some sense of scale there, it's claystone, not spodumene, but nevertheless, it's comparable in size to Pilbara's Pilgangoora project, so which has an 8.9 million ton LCE lithium carbonate equivalent resource. So, but those projects are high priority in the United States, and on that front, we are also starting to reach out to the various regulators and also the US administration to push those projects along, given that the metals industry has come to the fore in terms of politics in the United States now as well.
Yeah, they're focused on mining now over the last sort of 12 plus months, so a great time to be a project in Nevada.
Yeah, very much.
Lots of opportunity.
Yeah.
So let's talk about your team and the board and the experience of each of them.
Sure. So I'll start with our board. We just had Mr. Neil Stewart step off the board, actually. He founded Orocobre. He was one of the founding directors of the company. He was a founding director of Orocobre back in 2007. He stepped off, and Brendan Borg has taken his position. Brendan, as you know, who you know well, Steve,
lots of lithium experience.
Exactly, correct. And most importantly, he's got West African lithium experience in Mali. He really likes his projects. He's invested in the last placement, and brings to bear some very good technical expertise.
Well, you've already mentioned, sorry to interrupt, you've already mentioned PLS, which he knew before it sort of got going that there was a lot of opportunity in PLS, and he was spot on with
it. Exactly. I think he's got some good sense with lithium. He also invested in ABZ, and then did the same with Leo's Goulamina asset in Mali.
Yes.
So yeah, and in the background, we've got a promoter who has been involved with ABZ and a number of other big lithium companies, who's also close to Brendan.
Is that Michael Langford?
That's exactly right. Yeah.
Yep. No, another experienced lithium person.
Exactly, and Michael's been instrumental behind some of the China deals that are happening. Steve.
Excellent. Good contact to have.
Correct. And then going back to the board, Frederick Forney, elite sort of legal thinker, ex-investment banker at Macquarie, graduated magna cum laude from Georgetown Law, which is one of the best law schools on the planet. He's on our board. And then myself, oil and gas industry background in investment banking with Macquarie and Deutsche Bank. And then I ran a lithium company from 2016 to 2019 before founding this company.
And
So
I think something we should highlight too, that you own around 20% of the company, which is significant and shows a lot of belief in in what you're doing.
yeah, Steve, I think I've just managed dilution better than other people, right? And to that end, we are borrowing heavily and taking a leaf out of Twiggy Andrew Forrest's book with Fortescue. So when people start seeing some of the moves we're going to make, because these are very real assets, and we've made a whole of region play similar to Fortescue back in 2004, we think their strategy is very suitable for what we're doing. So a lot of the China deals, etc., is going to be borrowing from their playbook. Just to
Excellent.
manage dilution. Like if you look at where Andrew Forrest ended up, 30% of that company, right? Of a company
Exactly.
that's worth over $20 billion. Yeah.
And again, a lot of people doubted him, but look where he is now.
Yeah, exactly. Yeah.
And your capital structure, that's impressive. You only got just over 200 million shares on issue, which is fantastic. Not a lot of shares.
Yeah, look, we've raised at an average price of around 30 cents per share to date. We've raised $35 million. Half of that came when we were a private company. So we raised and spent a lot of money setting up the portfolio privately before we came to the market. And despite the downturn, we have, I'm a hawk when it comes to dilution, Steve. That's probably one of my number one topics to worry about running the company. And so we've just been very careful around dilution. I think that's all that can be said there. Obviously, we've had to raise some capital during this downturn. So we started with about 157 million shares. We've got to 206 million shares now. So 157 in 2023. Over the last 2 years, we've issued about 50 million. And we've done so because we wanted to go and seize these opportunities that we saw during the downturn, right? So we wanted to do some portfolio building, and that was in the form of entering Nigeria with these 4 iconic assets in my mind, and also repossessing the Horizon asset through our investment in Mustang Lithium Limited. So yeah, so it's very much a function of managing dilution.
Well, I think you've done extremely well because it's the nature of mining, constantly raising capital. So if you can protect the number of shares on issue, which you're doing, it's a great achievement.
Right, and it's also cost management, Steve. So we turned off our salaries for about a year, not for everyone. Fortunately, everyone were liquid enough to tolerate that. We just recognized where the market was at the time and did what we needed to
conserve money.
Yeah.
And let's highlight today too, because obviously you're having a nice run on the market and already up, from around 32 mil to 40 mil and around 19.5 cents currently. So having a nice run today as well.
Yeah, Steve. So my philosophy is that we want to make moves to improve our cost of capital, right? So the moves that we're going to make, as I said, we're going to borrow heavily from the Fortescue playbook when they were, a junior company in 2004. And the idea is to excite the market with activity, not just drilling and at the project level, also various corporate activity. And I think that's what investors can expect with us. Correct. Yeah. So I think the share price is fitting. We're looking for it to be a multi-dollar stock in the sort of 12-month horizon. Yeah. So we're not surprised. We're happy, and we wanted to keep going.
And just touching on sort of financing again, which you've already sort of talked about, it's about partnering with China companies. Is that the way forward, sort of over the next 12 to 24 months, if and when needed?
Yeah. So our thinking on financing is to manage dilution as best we can. So to that end, we want to raise capital at the asset level, not at the Chariot level as much as possible. And to that end, we are in deep discussions with Chinese offtake companies, companies that are sort of $1 billion in size, revenue, up to 20 billion, and some of the largest battery names in the world in China. And so our approach to financing is going to be, in this order.
First, well, that says a lot about the opportunity, having, $1 billion companies interested in partnering with you.
Yeah, and I can't mention the name, but there is one company that processes around 20% of the world's lithium. We're in deep discussions with them, had a series of good meetings and dinners in Perth and China.
So watch this space.
Exactly.
Hoping some good news comes out in the near future with that.
Exactly.
And sort of finally, obviously you've mentioned a lot of why investors should consider Chariot Resources, but how would you finish off to appeal to investors to invest?
So Steve, I'd say we are the best exposure for investors as it stands in lithium, bar none. So, having been in this industry for now 10 years in the lithium industry, where we stand today, we've survived the lithium winter. Most of our peers have disappeared, right? In terms of exploration companies, in terms of an undrilled portfolio, we've got the best undrilled portfolio. It's got exposure to China. It's got exposure to the US domestic lithium supply story. It has exposure, it's leveraged to the drill bit in all cases, in Nigeria, in the United States, at all of the projects. With capital being there, we're going to drill all of them this year, 2026. So you can expect basically continuous drilling. And then the overlay on top of that is the Nigerian assets can go back into production with a modest amount of capital. We're talking, 10 million US of capital can get us into tens of millions of dollars of revenue from those assets. Yeah.
Fantastic. Very low capex, because you look at a lot of these companies going into or getting towards production, they're having to spend, hundreds of millions of dollars to get there. So very cost effective.
Yeah, to a certain scale, and then you need to take a different approach. But to a certain scale, we can do it cost effectively.
Excellent. Look, really appreciate your time, Shanthar, and looking forward to watching your company and all the exciting opportunities and announcements over the next 12 months.
Wonderful, Steve. Thank you for your time.
Excellent. Thanks, Shanthar.
Thanks.